this point. And if you look back at the last 5% correction we've had, if we can make it to mid-January, it'll be the longest stretch of performance without a 5% correction and since before the Great Depression. So I think we're probably overdue. You could see a buy the rumors, sell the news with Trump signing in this new tax package. But we do think that that pullback should be bought, because the same dynamics that made 2017 such a good place for investment will continue.
It sounds like you think next year will be as good a year. I mean, when I read through your note, it almost sounds like things are going to be Goldilocks. You know, interest rates will climb, but not too much. The VIX will rise, but not too much. Inflation will bottom. I mean, China's soft landing.
Yeah, it is good. I think it will be a Goldilocks situation. The one thing that does give me a little bit of solace is that the Fed recently, with their FOMC minutes, said that they increased their growth expectations for the next 3 years, but they didn't increase their inflation expectations in light of the tax package. So you still have a Fed that's going to be accommodative, continue to normalize very slowly, but not at a pace that's going to threaten the recovery.
What could eat Goldilocks, Bob?
Yeah, I think there's a lot of potential things out there that could upset the market. I mean, you never know about this Bitcoin. That could certainly spread to the overall market if it has a major collapse.
Hold on. I'm sorry. Bitcoin has very little institutional ownership, Bob. How does that spread to the market?
Look at all the companies that are trying to get to, the point where they accept Bitcoin. Look at Goldman Sachs opening up a Bitcoin desk. So I think a lot of folks that are involved with Bitcoin right now are sort of neophytes, and so you get a major collapse in that. That spreads the concerns about the overall market. There's a lot of retail investors out there that really don't know where it ends, and so they get scared. They start, selling out of their equity holdings. You really don't know where that could go. So I think that's one concern. I think an over-aggressive Fed, that's another concern. I think if you can't get this infrastructure bill or talk passed, I think that's another problem. I think, people are still going to sort of hover out there with North Korea and think that's a major problem. Now, none of these things I think are going to happen. In fact, I have a 30-40 target on the S&P 500. That's about 13.5% from the current levels. I think you're going to get it through a combination of earnings growth, helped by the taxes, people feeling better, corporations feeling better, positive sentiment, more spending. So I think you're going to see about $149.11 on earnings. I think you're going to see multiple expansion to about 20.8 times. That gets me to 30-40. I think it's going to be a pretty good year. But I think you have to be careful of the value trap. A lot of folks think there's going to be this major rotation from growth into value. There's going to be, a rebalancing of the portfolio. But if consumers are confident and business is confident, then growth should continue. And I think the companies that represent growth in cyclical areas of the market, that's where you want to be.